Hey everyone and welcome back to the channel. Today we'll be taking a look at Ethereum and discuss recent price movements as we fell down from the local top at $2,140 to slightly below $1,900. I want to shed the light on some important things related to price action and elaborate on where I truly see us heading in the future. So ETH has been quite the runner at the start of this year. We've spotted a very decent performance from it, and while most other alts have struggled to keep up with the rise of Bitcoin, Ethereum managed to climb from a very tough position around the lows to over $2,100 in a very short time. At this moment, however, Ethereum is slightly below the local top as it retraced quite a bit. It's once again below this long-term resistance, or we could also say the previous summer high levels. So let me break it to you and say that the 2K area is going to be the most important level, and I'll tell you why. First of all, it's definitely a psychological area, as most investors believe it's the ultimate level we must break above to sustain an upward pressure. And secondly, it's clearly the level we've got rejected from here in the past and also here once more in our attempt of breaking up high. This displays how important this area has been in the past. If you open up the VBVR indicator, which displays high level of interest in the market through horizontal spikes, we could notice that we have a cluster around our current level. This means that the level we're trading at is a high level of interest. This is where we see a lot of bidding, and so breaking above 2K and climbing up high isn't that easy according to this model. It's where most players will end up being exit liquidity, especially the high leveraged positions. It's really a bad idea, in my opinion, to open up a long position around a known resistance. Your odds aren't that good, because typically it takes multiple tries before heading up high. So again, just to be clear, the 2K level isn't that easy to get above, and so if you're planning on trading there, think twice. What we could also conclude through this model is that we have a giant horizontal spike below us around 1.6K. This is a high volume node, which means that this is an area where a high amount of volume was transacted in the past. This means that this area is going to be our next support in case of a fall down. Therefore, I believe that we will spend this month between this resistance and the high volume node. I honestly think that our odds of coming back down to test the support are high, and they are looking more likely each and every day. We are having a lack of interest in this market. I know that today's CPI was good, it was better than the forecast, but the stickiest parts of inflation remain elevated. If we were in fact in a bull market like many want to claim, we would see alts rise. However, most of them are getting slaughtered every single day, and they are back to their lows. This proves that the market isn't in a good condition yet. I've said this in the past. I told you to forget about what people are saying. An alt season won't happen. It's unlikely, it's very unlikely, get over it. And this is also one of the reasons why I sold around $30,000. This is coming from a person who at the end of last year said on his Patreon account that we should start thinking about deploying capital. And I once again tell you that things will get slightly worse in the months to come, in my opinion, of course. I do not think that the next months will treat us as good as the start of this year. Now, if we take a look at the KDJ, which is by the way a very good momentum indicator, we could see that the KND lines are falling down on this time frame after having a bearish cross. Usually, this is a bearish sign. Now, listen, it doesn't always imply that the price will for sure go down. But whenever we come across a similar pattern, the bearish cross pattern of course, the odds of us going down and experiencing a downward pressure increase. The last 3 times our KND lines have fallen from the highs, the outcomes were pretty brutal. For example, that happened here, as you can see, and Ethereum went down over 31% in just a week. That's clearly a massive correction. We've also seen that unfold in April of last year. The blue and orange lines gave us a bearish cross and then fell down. They started racing towards the downside, and in that same phase, Ethereum totally collapsed. I mean, you can obviously see how we went from $3,000 down to roughly $900. It was quite the fall. Something similar unfolded in 2021. The signal on the KDJ marked the start of the bear market and of the real shakeout. So, just to be clear, I'm not saying that this indicator is accurate every single time because, after all, it's a lagging model, so it's typically late and the signals come to play when we are already experiencing the move. But this model, the KDJ, has been very helpful in the past, and right now it's not giving us a good signal. So, again, I think we'll spend this month mainly between our current resistance and the $1,600 support. And I also believe we will visit this level. Could I be wrong? Absolutely. But as I said, indicators aren't looking good first and foremost, and despite the good CPI, I think the market isn't really at its best. There isn't much interest from market makers right now, and so I'm in favor of sideways movements in a tight range followed by a move down. So we'll see how it plays out. Thanks again for sticking by till the end. If you like the video, leave a thumbs up. Please comment down below your thoughts. Just give me your perspective. I'd honestly like to know where you see us heading in the future. And that's it. Bye bye.